Welcome to the channel. Here, we provide clear, actionable insights into the complex world of tax and accounting to help your business thrive.
Okay, get ready, because financial statements are about to get a major, and I mean major, facelift. Today, we are diving into IFRS 18. It's a brand new global standard that's going to completely change how companies report their performance. So let's break down what's new and what it means for you.
So here's our game plan. First, we're going to tackle the puzzle that IFRS 18 was created to solve in the first place. Then, we'll get right into the biggest change of all, a brand new profit and loss statement. After that, we'll decode the new rules for those custom metrics companies love to use and see how the fine print, the notes, is finally getting clearer. And to wrap it all up, we'll boil it down to the key takeaway.
All right, let's kick things off with the big question, why? Why did we need this huge overhaul? You see, IFRS 18 isn't just another rule for the sake of it. It's a direct solution to some very real, very frustrating problems with financial reports. And it's a totally fair question to ask. For years, the people who actually use these statements, we're talking investors, analysts, you name it, have been saying that they're getting harder to understand, not easier. The two biggest culprits? A serious lack of consistency and clarity. And these were the core frustrations. First, something called disclosure overload, which is basically where companies dump hundreds of pages of notes, burying the stuff that actually matters. Second, companies were just inventing their own performance metrics. You've probably seen them, like adjusted profits, with absolutely no consistent rules. This made comparing company A to company B a total nightmare, like comparing apples to oranges. The result? Investors were left trying to piece together a puzzle just to find the most basic information. So, let's jump into the most visible fix of all, a complete redesign of the profit and loss statement, or the P&L. Honestly, this is the one change you're going to notice right away. The new standard forces every company to sort their income and expenses into these 5 buckets. Think of it like a new filing system. Operating is your main business. Investing covers your assets. Financing is all about your debt and equity costs. Income taxes is, well, it's income taxes. And discontinued is for any parts of the business you're selling off. The key thing here is that this structure is now mandatory for everyone, no exceptions. Now, this right here is the real game changer. IFRS 18 introduces 2 mandatory subtotals that every single company has to report: operating profit and profit before financing and tax. So why is this such a big deal? Well, because for the very first time, we have a standardized definition. Everyone has to calculate operating profit the exact same way, which creates this incredibly powerful, consistent benchmark for analysis that, believe it or not, just didn't exist before. Okay, let's see what this new structure actually looks like. Check out this example P&L. You can see we start with revenue, and then we get to that first required subtotal, operating profit. That is the pure profit from the core business. Next, you factor in the investing activities, and that gets you to the second required subtotal, profit before financing and income tax. It's only after that point that you subtract financing costs and taxes. See how it creates this really logical story? It shows exactly how performance flows from the operations all the way down to the final profit number. Okay, let's move on to the next big problem, that wild west of inconsistent metrics. IFRS 18 is basically bringing in a new sheriff, and it's called Management Performance Measures, or MPMs, to finally bring some law and order to the whole situation. So what on earth is an MPM? Well, simply put, it's any custom profit number that management uses in public, say in an earnings call, to tell their version of the story. You have definitely seen these before. I'm talking about terms like adjusted EBITDA or underlying profit. Now, the problem wasn't that they existed, it was that every company defined them completely differently. And this quote right here tells you exactly why companies love using them. Management wants to show you a version of profit that strips out all the unusual stuff, like a big one-off restructuring cost, to present what they call the true underlying performance. Now, IFRS 18 doesn't ban this, not at all. It just forces them to show their work. And here it is, the new rule in action. If a company wants to use an MPM like adjusted operating profit, they now have to show this exact reconciliation. Look at how they start with the official IFRS operating profit of $12,872. Then they clearly add back the impairment and restructuring costs, and they subtract a government grant to get to their custom number of $13,119. All the math is right there, out in the open, in one place. The benefit here is just huge. No more detective work hunting through footnotes and press releases just to figure out what adjusted actually means this time. It is now required to be in a single, clear note right inside the official financial statements. This is a massive, massive win for transparency.
All right, now for the final piece of this puzzle, the notes. This part of the standard tackles that disclosure overload we talked about earlier, and it's all about pushing companies to move away from a simple compliance checklist and towards genuine communication.
The old approach was basically a checklist. Companies would just include every single disclosure imaginable just to be safe, which created hundreds of pages of boilerplate text that was almost impossible to get through. The new guidance encourages a storyteller mindset. Focus only on what's truly important to your business and group related information together to tell a coherent story.
And this table just shows the new approach perfectly. Instead of some random long list, IFRS 18 encourages companies to group notes by theme. So you might start with general company info, then group all the notes about operations together, and then maybe have a whole section for major one-off events like acquisitions. This logical flow makes it so much easier for a reader to find exactly what they're looking for.
So let's bring it all home. What are the absolute key things you need to remember about IFRS 18? You know, when you really boil it all down, IFRS 18 is about 3 huge upgrades. First, it provides structure with that mandatory P&L format. Second, it delivers transparency by forcing companies to explain their custom metrics. And third, it pushes for clarity with better organized notes. The end goal here is actually pretty simple. Make financial statements genuinely useful and comparable again.
But this all leaves us with one final critical question. The goal here is absolutely financial clarity. But will these new rules actually deliver on that promise, or will they just create a new, different kind of complexity? As companies start to adopt IFRS 18, that is exactly what we'll all be watching for. Thanks for joining this explainer.